Have you ever wondered what's really driving the incredible growth we're seeing in India's financial markets, especially with so many new investors, jumping in?
It's a fascinating picture, isn't it?
Definitely. And today, we're going to dig into that by taking a deep dive into Angel One Ltd, specifically their Q1 FY26 financial results.
Right. Our mission here is really to cut through all the reports, the presentations, and give you the essential insights. Maybe even some surprising facts about how Angel One is, well, changing India's investment scene.
Think of this deep dive as your shortcut to getting up to speed, whether you follow the fintech sector closely or you're just curious about market trends.
Or even just, what makes a big digital financial platform tick in such a fast-growing economy. We'll try to highlight those aha moments for you.
Exactly. Connect the dots, look beyond just the numbers.
Let's hear it.
Okay, so let's unpack Angel One's Q1 FY26 performance first. What are the main financial highlights telling us beyond the initial headlines?
Well, first off, their total net revenues saw a pretty solid increase. They hit 8,913 million in Q1.
Okay.
That's up 7.3% just from the previous quarter. So, good revenue growth there.
That sounds strong, yeah.
Yeah,
Especially given, general market conditions, it sets a good baseline.
it does. But this is what we need to look a bit deeper, especially when it comes to profit after tax, or PT.
Right.
The reported PT was 11,145 million. Now, on the surface, that looks like a big drop, 34.4% quarter over quarter.
Okay, yeah, that definitely catches your eye. A 34% drop sounds significant.
It does, and that's why context is so crucial here.
So what's the story behind that number?
Well, this is where it gets really interesting. That reported figure doesn't account for some major one-off items.
Such as?
Primarily their big IPL sponsorship spend. They booked the entire expense, 11,117 million, upfront in Q1.
Ah, okay. So a huge marketing cost hit all at once.
Exactly. And there was also a variable pay reversal in the previous quarter, Q4, which had boosted that quarter's profit.
Got it. So comparing reported numbers isn't apples to apples then.
Precisely. When you normalize for these things, adjust for them, the picture flips. Their adjusted pay actually shows strong growth.
Strong.
It grew 26.0% quarter over quarter, reaching 1,922 million.
Wow. Okay. That's a completely different narrative,
Hmm.
from a 34% drop to a 26% increase.
Right. It really highlights the underlying profitability once you strip out those temporary factors. Shows strategic investment impacting the short-term view.
Makes sense. And I assume we see a similar kind of story with IBDAT, earnings before depreciation, amortization, and tax
You
rate.
got it. Same pattern. The reported EBITDA was 1,944 million, which was down 26.5% quarter on quarter. Reported margin was 21.8%.
Okay.
But again, you normalize it, and
Yep.
the normalized EBITDA jumped 30.5% QoQ to 3,061 million.
And the margin?
A much healthier 34.3% normalized EBITDA margin. It's also worth noting they mentioned new business incubation costs trimmed about 2.6% off that Q1 margin.
So investing in future projects.
Exactly. Points to a company playing the long game, even if reported figures take a temporary hit.
Okay, that clarifies the profitability picture significantly. What about growth in terms of, actual users and activity? Are they still expanding their reach?
Oh, definitely. The expansion is quite remarkable. Angel One's total client base hit 32.5 million.
32.5 million, that's huge.
It is, and growing fast, up 4.7% just in the quarter, and a really impressive 31.3% compared to last year.
And are they still acquiring new clients at a fast pace?
Seems so. They added 1.5 million new clients just in Q1 FY26. That's up 4.4% quarter over quarter and a massive 40% year over year. The acquisition engine is clearly still firing.
Okay, so lots of clients, lots of new signups, but are
Mhm.
they active? What about engagement, like transaction volumes?
That's the crucial next question, right?
Yeah.
And the activity levels are high. They processed 343 million orders this quarter.
343 million.
Yeah, up 4.8% from Q4 and nearly 26% from the year before. So sustained growth in activity.
And what kind of orders are these mostly?
This is interesting. The breakdown shows a heavy skew towards F&O futures and options. That accounted for 241 million of the orders.
Wow, the vast majority.
Yeah. Cash segment was 75 million, commodity was 27 million. That high F&O number suggests a pretty active, maybe more sophisticated user base engaging in derivatives trading, not just casual stock buying.
That does imply deeper engagement.
Right.
What about metrics like average daily turnover, ADTO, and assets under custody? Did they back this up?
They absolutely do. ADTO hit 1.0 trillion. That's trillion with a T on a premium basis.
1 trillion rupees daily.
Daily, up 23.2% quarter over quarter and 40% year over year. It shows incredible liquidity and user confidence.
That's staggering. And assets under custody, the amount people are holding with them.
Also growing strongly, it reached 1.4 trillion, serving 9.1 million clients who hold assets. That's up nearly 17% quarter over quarter.
So people aren't just trading, they're holding significant wealth on the platform long term.
Seems that way. It's building trust and becoming a core platform for many.
So it's clear broking is still the core engine. But Angel One seems to be evolving beyond just being a broker, right? How are they using tech within that core business?
That's a great point. Their broking is very much tech-led. They use advanced AI and machine learning models, plus behavioral analytics.
For what specifically?
Well, obviously for client acquisition, but also for personalization, offering tailored opportunities to users. They even have things like AI-generated market summary podcasts.
In multiple language.
4 languages, yeah. And curated advisory reports like Technofunda or option strategy guides, trying to add value beyond just executing trades.
Yeah, makes sense. Now, these growth numbers are impressive, but how does it translate into actual market share? Are they gaining ground against competitors?
Good question. And the market share figures do back up their growth. They now hold 16.3% of all Demat accounts in India.
16%. That's substantial.
It is. And it's growing up 19 basis points just in the quarter and over 100 basis points, so over 1% year over year.
Basis points are tiny, so steady gains there.
Exactly. They also capture nearly 20%, 19.7% of the overall retail equity turnover. Maybe a slight dip quarter on quarter there, but still up significantly year on year.
Yeah.
And here's a key stat. They're capturing almost 22% of incremental Demat accounts. So they're getting a big slice of the new accounts being opened.
That suggests strong momentum with new market entrants.
It does. And their client funding book, basically lending for trades, hit an all-time high of nearly 48 billion. Importantly, they mention negligible NPAs, non-performing assets, suggesting good risk management there.
Okay, so the core broking business is strong, tech-infused, and gaining share. But you mentioned diversification earlier. This seems crucial for their long-term story. What else are they building?
This is where it gets really interesting, I think. They're aggressively moving into other financial products. Credit dispersal is a big one.
How big?
It soared 123.6% quarter over quarter to 2.3 billion dispersed in Q1 alone.
Wow, that's explosive growth. What's driving that?
They say it's driven by rising user affinity for credit on the platform, combined with an asset-light model using their AML scorecards for lending decisions. Cumulative dispersal is now over 9 billion.
So leveraging their existing user base and data. Smart. What else? Mutual funds.
Yes, making big strides there too. They're ranked in the top 2 for incremental SIP registrations.
SIPs being the systematic investment plans.
Correct. Very popular for regular investing. They have 1.9 million unique SIPs registered and over 2.7 million unique mutual fund clients overall.
Okay, significant presence there. And wealth management.
That's growing fast too. Assets under management, AUM, up 33.6% QOQ to nearly 51 billion. They're serving over 1,000 clients across 9 cities.
How are they serving those clients? Is it all digital?
They mention an omni-channel approach, so likely a mix of digital and human interaction. And interestingly, they mention AI agent support for their relationship managers, their RMs.
Using AI to empower their advisors. Makes sense.
And it doesn't stop there. They also have their own asset management company, an AMC.
Okay, like a fund house.
Exactly. It's still emerging, focused on passive investing like index funds and client education. About 3.4 billion in AUM currently, with 5 schemes, 2 launched just last quarter.
Passive investing is definitely a growing trend.
For sure. And they're also adding things like fixed income products. They mentioned instant FDs and looking into insurance distribution.
It really sounds like they're building a comprehensive financial ecosystem.
That's the goal, clearly. Leverage data and AI across all these products to increase the lifetime value of each client, build loyalty, and create that ecosystem lock-in. Move from just transactions to managing a client's entire financial life cycle.
And underpinning all of this is their technology platform, right? How central is that tech-first idea?
Oh, it's absolutely fundamental. The Angel One super app is the core. They're constantly enhancing AI, ML, analytics capabilities.
And security. That's crucial with financial data.
Definitely. They highlighted their ISO IEC 27001.2022 certification, which is a strong standard for information security management, embedding security everywhere.
So the tech enables scale, efficiency, reliability.
Exactly. Low latency, high efficiency, scalable, fault tolerant, all critical when you're handling the volumes they are.
That robust tech is vital, especially when you look at the context.
Yeah.
The sheer untapped potential in India.
Absolutely. The India growth story is a huge part of this. The financial market is still incredibly underpenetrated.
What are the numbers on that?
As of June 2025, only about 3.3% of India's population had an active NSE account. That's roughly 48 million active clients out of nearly 200 million total demat accounts.
Just 3.3%. So, a massive runway for growth.
A huge runway. The addressable market is enormous.
And the demographics play into this too, right? A young population.
Precisely. Median age around 29-30. A growing working age population, rising incomes, and crucially for Angel One, their strategy is working beyond the big cities.
Ah, the Harat strategy.
Yes, over 88% of the new clients in Q1 came from Tier 2, Tier 3, and beyond cities.
88%. That's incredible penetration into smaller towns and rural areas.
It really underscores their success in reaching underserved populations, often first-time investors.
That must be a huge strategic advantage, getting in early with that demographic.
It certainly seems so. And overall, retail investor confidence seems to be growing in India. Individual investors' direct holdings in listed companies are up.
I saw that stat from 9% to 9.5% over 5 years.
Right. And the total value held by individuals has more than doubled since 2021, hitting 39 trillion. Plus, significant net inflows from individuals into the cash market. It all points to growing participation.
And you mentioned something earlier that really stood out, their resilience during market downturns. Can you elaborate on that?
Yeah, this is quite telling about their fintech model. They looked back over the last 75 months
Okay.
and found that in about 75% of the times when major indices, Nifty 50, Midcap 150, Nifty Bank dropped by more than 5%.
Which happens fairly often.
Right. In most of those instances, Angel One's average orders actually increased.
Increased during a market correction. That's counterintuitive.
It really is. It suggests their platform is sticky, their users are active traders, maybe even see dips as opportunities. It really demonstrates a robust, maybe even cycle-defying digital business model. People turn to the platform when things get volatile.
That's a powerful indicator of the model's strength.
Yeah.
Okay, let's shift gears slightly. Beyond the numbers and the tech, what about the strategic vision? What are the leaders saying?
Well, Dinesh Thakkar, the chairman and MD, talks about India being at the cusp of a financial revolution.
Strong words.
Yeah. He sees Angel One's role as using technology, data, and AI to bridge the gap, making finance smarter and more inclusive. His vision points directly to that growth beyond Tier 1 cities, delivering low-cost, high-engagement services at scale, empowering, as he put it, a billion lives.
Quite ambitious. And how does the group CEO, Ambarish Kenyan, articulate the strategy?
Kenge focused more on the operational side, the resilience and scalability of their model. He emphasized embedding intelligence data, AI, analytics across everything they do.
For what purpose?
Deeper client engagement, better retention, higher lifetime value. He also specifically mentioned how brand investments, like the IPL sponsorship we discussed.
Right, the one that hit the Q1 profits.
Exactly. He framed that as building trust and recall, which creates a foundation for cross-selling all these other products they're launching.
Makes sense. Building the brand to support the ecosystem. Now, a company's culture is often key to executing such ambitious plans. What can we glean about Angel One's internal environment?
They seem to put a lot of emphasis on it. They've been certified as a great place to work for 9 years running.
That's a consistent record.
And ranked in the top 100 best companies in India for the last 4 years, hitting rank 20 in 2025.
Pretty high up.
They also highlighted their diversity, equity, and inclusion efforts, things like a women's employee resource group, a program for women returning to work called Unpause,
Okay.
and a hashtag Queer1 circle for LGBTQ plus inclusion. They've also expanded hiring to include persons with disabilities and LGBTQ plus talent, and even ran financial literacy programs for the LGBTQ plus community.
So active efforts on DEI. What about employee wellness?
They have a program called Angel Care Plus. It seems quite comprehensive, covering mental health, fertility support, gender affirmation support,
Wow.
and even lifelong support for employees' children with special needs. That goes pretty far.
That definitely sounds comprehensive. And CSR, corporate social responsibility.
They mentioned their CSR programs provided livelihood support to over 1,200 beneficiaries across 15 states just in Q1.
So tangible impact there too.
Yeah, and these efforts, along with their business performance, seem to be getting recognized. They listed a bunch of recent
Such as
awards:
like,
PR, digital transformation, their mobile app, social media campaigns, and interestingly, an award from AWS for using Gen AI at scale, which ties back to their tech focus.
okay, so wrapping this all up, what's the biggest takeaway from this deep dive into Angel One's Q1?
I think the main picture isn't just about solid, albeit nuanced financial performance. It's really about a tech-driven company strategically positioned to capture a huge opportunity in India's growing and still largely untapped financial market.
Right. Feels like a story of resilience, definitely innovation.
And a very clear vision for growth, fueled by AI, data, and that push into smaller cities.
So here's a thought to leave you with. As India's digital financial revolution keeps accelerating, how might Angel One's focus, that dual focus on AI personalization and deep penetration into Tier 2 and 3 cities, how might that reshape things?
Not just the investment landscape, maybe, but the very definition of financial inclusion for potentially, hundreds of millions of people. What stands out to you as the most critical part of their strategy going forward?
Something to ponder. We definitely encourage you to keep exploring how technology is changing the face of finance. Until next time, stay curious.
And keep diving deep.